Welcome back to the Malaysia Money Matters show. It's the 6th of May, 2025.
Good to be back.
Today, we're diving straight into what's happening with Malaysian companies, some international developments, and political headlines, too.
And really focusing on how it all connects back to you, the listener.
Exactly. A lot to get through, so let's get right to it. How are these events shaping our economic landscape?
Well, there's quite a bit moving.
Okay, let's start with Malaysian company news. First up, AT&S. That's the Austrian tech firm, right? With the big plant in Kulim.
That's the one. They're making those high-end IC substrates, mainly for AMD's computer chips.
Now, the interesting part, they aren't currently facing those U.S. tariffs everyone's talking about.
Right, because technically the products aren't classified as semiconductors at that stage, and they're shipping them to assembly and testing companies, OSATs, mostly in Taiwan and Malaysia.
But they're keeping a close eye on things.
Oh, definitely. They're really watching the whole U.S.-China geopolitical situation, especially with big players like TSMC and Amkor setting up shop in Arizona.
Because that could change things down the line.
Precisely. If those U.S. bases become major hubs, AT&S might eventually need to ship directly to the U.S.
And then the tariffs could bite.
Exactly. So it's something they're monitoring. It shows how complex these supply chains are, you know?
Absolutely. And that Kulim plant. Well, it's a major operation.
Yeah, they kicked off high-volume manufacturing back in March, almost exclusively for AMD's data center processors for now.
And the growth projections are pretty ambitious.
Very. They're looking at a 30% compound annual growth rate, CAGR, in revenue between FY 2026 and FY 2031. That's huge.
Wow. And they're aiming to expand their customer base, too, not just AMD.
That's the plan. From one main customer now to 3 by FY 2026, and hopefully 5 by FY 2027.
And the investment itself is massive.
It really is. Phase 1 is about 1.7 billion, which is, what, over RM 8 billion?
Yeah, something like that.
And they've already put in over 1 billion, including a hefty RM 600 million just on R&D.
It's their biggest single project investment anywhere, isn't it?
Globally, yes. And the biggest ever by an Austrian company here in Malaysia.
Plus, thousands of jobs, 6,000 for Phase 1 alone.
It really highlights Malaysia's growing importance in that tech supply chain, especially the back-end semiconductor manufacturing. It's a big vote of confidence.
Okay, moving on locally. Ekovest. They got the government nod for 2 new links for the Duke Expressway.
Phase 2A, that's the Laluan Istana Kiara and the Kampung Baru link.
So the Santa Kiara link is proceeding after getting the all-clear from the AG's chambers.
Yes, and the concession agreement for the Kampung Baru link, they're aiming to finalize that by the end of 2026.
Weren't these part of a bigger approval years ago?
They were back in 2017. There was also a Kapar link mentioned then, but no update on that one in this news.
The traffic on the existing Duke 2 has really picked up.
Significantly since it opened in 2017. Shows the demand for better connectivity in the Klang Valley is definitely there. Infrastructure investment is always key.
Next, West River. They just listed, right? An engineering firm.
Yeah, relatively new listing. And they're bidding for a data center project down in Johor.
Expanding beyond the Klang Valley.
Yeah.
Because that's where most of the revenue comes from now.
Exactly. About 80% currently. So Johor's a strategic move. Data center projects usually take, what, 9 to 12 months?
Something like that. And it's a decent chunk of their potential work, 13% of their tender book.
They're also looking at other things like hotel construction in Penang and Langkawi, maybe partnering with established brands.
Diversifying. And expanding production capacity, too. New factories.
Exploring land for that, yeah. Rawang and Semini. Plus, they just snagged a smaller RM 13.88 million electrical subcontract in KL.
Busy times for them. Okay, quick one. Evergreen Max Cash Capital.
Their pawnbroking subsidiary, Pajakadai E-Assets, secured a RM 40 million loan from CIMB.
So more borrowing, higher gearing, but they expect it to boost earnings.
Yeah, expected to lift earnings per share for FY 2025. More capital for their core business.
Right. How about Frontkin, their first quarter results?
A slight increase in net profit, about 3.37%. Driven mainly by their semiconductor business, which is doing well.
But overall revenue was down.
A bit, yeah. Lower contribution from their oil and gas segment. Partly timing, Lunar New Year and Ramadan periods affected activity.
And they're looking at partnerships because of the whole onshoring trend in semiconductors.
Exactly. As more countries want to build their own chip capabilities, Frontkin sees an opportunity to expand its footprint through collaborations. They're still pretty confident about future demand, especially with AI driving things.
Makes sense. Now, Gamuda, big news there. with Google.
Huge news. They sold that large plot of land in Port Dickson, 389 acres, to a Google affiliate, Pearl Computing.
For a hefty sum, RM 455 million. Wasn't that land originally earmarked for data centers anyway?
It was. And now, Gamuda isn't just selling the land, they're also doing over $1 billion worth of enabling works for Google's data center.
Wow, like what?
Things like a new water treatment plant,
Yeah.
off-river storage facility, basically getting the site totally ready.
So Gamuda is positioning itself as a provider of these ready-to-build platforms for hyperscalers like Google.
Absolutely. It's a major validation for Gamuda and for Malaysia as a data center hub. Partnering with Google is a big statement.
Okay, Gas Malaysia. Kenanga Investment Bank expects softer Q1 results.
Yeah, they're pointing to the usual seasonal weakness, plus maybe lower margins from some renewed contracts.
And gas prices themselves have softened.
They have. That impacts Gas Malaysia's selling price, which is linked to things like the Malaysian reference price and Brent crude.
Plus those pipeline explosions in Putra Heights, that's going to have an impact too.
Expected to hit sales volume by about 3%. So a few headwinds there for Gas Malaysia in the near term.
All right. Lottie Chemical Titan. How are they doing?
Well, they managed to reduce their net loss in Q1 compared to last year. That's positive.
What else?
Better margins, apparently. Lower depreciation costs, too, and some profits from their U.S. associate company.
But revenue was down.
Yes, lower sales volume and lower average selling prices. Plant utilization was also down a bit.
So still facing challenges.
Definitely. They're expecting continued global uncertainty, a cautious outlook overall. But their big line project in Indonesia is still on track for completion this year.
Good to know. Let's talk retail Mr. DIY Group. Record results.
Record high revenue and net profit for Q1 FY 2025. Very strong performance.
What drove that? Festive sales.
That was a big part of it. Also improved margins and just continued store expansion. They keep opening new outlets.
How many this year?
Plans for 190 new stores in 2025. Massive expansion.
And they're not worried about U.S. tariffs.
Apparently not concerned about it impacting their performance, suggests strong domestic focus or effective supply chain management.
And a dividend declared too.
Yep, an interim dividend of 1.4 cents per share. Shareholders will be happy.
Okay, Tanchong Motor Holdings, big move into EVs.
Yes, partnering with SAIC GM Wuling from China. They're introducing Wuling EVs to Malaysia under a new brand, TQ Wuling.
And they'll be assembling them here.
Got approval for semi-knockdown, or SKD, assembly. The first model is expected in Q4 next year, the TQ Wuling Bingo, a compact EV hatchback.
And SKD assembly means they can keep the price down.
That's the goal. Aiming for below RM 100,000, that could really shake up the affordable EV market here.
Where will they assemble them?
At their Segamba plant. And there's even talk of potential for regional exports later on.
Interesting development. Lastly, for Malaysian companies, TAS Offshore.
They secured shipbuilding contracts worth RM 38 million, 6 tugboats for 2 new Indonesian customers.
Delivery in FY 2026.
That's right. And they also declared an interim dividend of 2 cents per share for FY 2025. Good news for their order book and investors.
Okay, that covers the key Malaysian company updates. Let's shift gears to the international scene. First, the Asian manufacturing PMI.
Yeah, that dipped in April, fell to 48.7. Anything below 50 indicates contraction.
So a deterioration in the manufacturing sector. First time in a while.
First time in 16 months, actually. Drops in output, new orders, and business confidence weakened too. A bit of a worrying sign for regional momentum.
Over in Europe, the EU and Russian gas.
Right. The EU is set to propose banning Russian gas imports by the end of 2027.
That's pipeline gas and LNG.
Both. It's part of their big push to cut reliance after the Ukraine invasion, but it's contingent on them securing alternative supplies, which is the big challenge.
Of course. Now, OPEC plus oil production, they agreed to pump more.
Further accelerate output hikes, yes. And they might even unwind those voluntary cuts completely by the end of October if member compliance improves. That's a big if.
And that's pushed oil prices down.
Yeah, prices tumbled on that news. Interestingly, though, Saudi Arabia, despite the overall supply increase, actually raised their prices for Asian buyers.
Suggests they still see strong demand here.
Seems likely. A bit of complex signaling there.
Okay. Switzerland inflation hits 0.
Dropped to 0 in April, weakest in over 4 years, mainly because the strong Swiss franc is making imports cheaper.
So, more chance of rate cuts from the Swiss National Bank.
Increases the likelihood, definitely. Gives them more room to maneuver.
How about Indonesia? Rate cuts expected there, too.
Yes. The central bank is expected to resume easing, maybe 2 cuts this year. partly a response to rising U.S. tariffs on Indonesian goods.
The tariffs are hitting their growth forecasts.
Yes, forecasts have been lowered, and their manufacturing activity already fell. So the central bank is likely to step in to provide some support.
Speaking of tariffs, any updates on U.S.-China trade? President Trump hinted at some deals.
He indicated potential for deals with some countries soon, offered a bit of relief maybe after the recent tariff hikes.
But the specific tariffs are just paused, right? For 90 days.
That's right, while that blanket 10% tariff remains in place. So tensions haven't vanished, but maybe some room for negotiation.
Let's look at investment flows. Foreign investors still buying Malaysian shares.
Continued net buying on Bursa Malaysia for the second week running. Good inflows into financials, healthcare, industrial products.
But local institutions and retailers were selling.
Still net selling, yes. Different perspectives, maybe? Foreign investors were also strong buyers across Asia, especially India and Taiwan.
And the Taiwanese dollar surged.
Massively. Biggest single-day gain against the U.S. dollar since the 1980s, apparently.
Why? Speculation about currency revaluation.
That and positive sentiment around those U.S. trade talks we just mentioned.
Right. U.S. Fed policy, are they expected to change rates soon?
The consensus is they'll hold rates steady at the upcoming meeting, despite pressure from President Trump for a cut.
Right, hold.
They seem to think the labor market is still healthy and inflation is easing, but,
Right.
Slowly. So they're likely sticking to their guns for now.
Okay. And finally, international news. A U.S. lawmaker wants to track AI chips.
Yeah, plans to introduce a bill to track the location of chips like NVIDIA's after they're sold.
To stop them being smuggled to China.
That's the stated goal, national security concerns. And apparently the tech to actually do this location verification is available.
Wow. Okay, that's a lot happening globally. Let's turn to political news closer to home. Malaysia-U.S. tariff negotiations.
Positive update there. Prime Minister Anwar Ibrahim said the U.S. agreed to continue the talks.
And possibility of reducing the tariffs.
Yes, reducing the imposed reciprocal tariffs. Though he stressed the discussions are still preliminary, early stages.
And Malaysia clarified its own average tariff on U.S. goods is quite low.
Only 5.6%, putting things in perspective.
Plus, the government's countermeasures that RM 1.5 billion support package for SMEs.
Yes, guarantees and financing for businesses affected by the U.S. tariffs. And they're expediting infrastructure projects, too, a multi-pronged response.
And Moody's rating seems positive on Malaysia's resilience.
They expect Malaysia to remain resilient despite global uncertainties, and interestingly, potentially benefit from FDI shifts because our tariff rates are relatively low.
Turning lemons into lemonade, perhaps? Okay, Malaysia-Pakistan cooperation.
They're proposing a Joint Economic Commission, a JEC, aiming to boost bilateral trade, investment, and development collaboration, strengthening ties.
Right, and a change in how certificates of origin are issued for U.S. exports.
Starting today, May 6th, MIDI, the Ministry of Investment, Trade, and Industry, will be the sole issuer for these certificates for exports going to the U.S.
Why the change?
To prevent illicit transshipment, basically stopping origin washing, especially in the solar sector, where goods from a third country might be rerouted through Malaysia to bypass U.S. tariffs, tightening controls.
Got it. What's HLIB saying about Malaysian stocks?
Hong Leong Investment Bank suggests stocks will remain volatile. Their advice: sell into strength for now.
They think the recent rebound is disconnected from fundamentals.
That seems to be their view. They recommend a sort of barbell strategy pairing high-dividend defensive stocks with undervalued laggards, hedging bets.
Interesting take. We mentioned Taiwan's currency surge linked to U.S. trade talks.
Yes, Taiwan confirmed they conducted the first round of trade talks with the U.S. No specific details given, but the confirmation itself likely boosted market sentiment and the currency.
And finally, Romania's presidential election rerun.
The first round was won by a hard-right Eurosceptic candidate, raising some concerns about potential isolation and instability for Romania within the EU context.
Okay, quite a mix of political developments, too.
Definitely a lot to keep track of.
So, wrapping things up, what stands out today as the, let's say, most exciting or significant development? For me, it's got to be that progress on the Malaysia-U.S. trade front.
Yeah, I'd agree. The fact that talks are ongoing, there's potential for tariff reduction. That's key.
And coupled with the government's concrete actions, that RM 1.5 billion support for SMEs, speeding up projects, it feels very proactive.
It does. It's not just waiting and seeing. They're negotiating and they're putting measures in place domestically to cushion any blows and strengthen the economy.
Plus, Moody's assessment adds that external validation that Malaysia is seen as resilient, maybe even an attractive spot for investment shifts.
Exactly. It paints a picture of navigating these choppy global waters quite strategically.
So what does this signify for Malaysian businesses, for you listening?
Well, for businesses, especially SMEs affected by tariffs, it offers a ray of hope for potential relief and tangible support now. For everyone, I think it signals a government actively working to protect the economy's stability.
Trying to turn challenges into opportunities where possible.
It seems that way. It's a complex global picture, but Malaysia appears to be managing its position quite assertively.
Okay, that brings us to the end of our deep dive for today, the 6th of May. We hope this rundown has given you a clearer picture of the key developments shaping Malaysia's economic landscape.
Yeah, hopefully connecting the dots on what matters for your money.
For more in-depth analysis and really to stay ahead of the curve on Malaysia's money matters, make sure you subscribe to the Malaysia Money Matters podcast.
Join us next time for another look at the forces shaping our financial world.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.